Hi, everybody. This is the Sentiment Timing Weekly Market Recap for Tuesday, February 17th, 2015. I hope you guys are navigating through this market as well as you can. It's been pretty tricky, and I know there's a lot of very, very good traders that have been caught flat-footed. So let's get started with our video. I'm going to go over... this one is going to be a little bit different because I'm actually going to go over... being wrong, but changing your view fast. And I'll go over all that, then I'll show you our sentiment chart and leave you with just some final thoughts. But like I said, this video is going to be on being wrong. But being wrong is kind of it's tough to even say that, because what happens is when you have a roadmap, and this is where we were anticipating some kind of top to come on February 6th. We did get the breakdown, but then we got this big day up, and Woody had picked up on this right away, and in our newsletter, which I'll go over, had said that things got a little bit tricky, and you want to really, really lighten up, don't be married to the date. And so we were wrong, but kind of just a break-even wrong. Now, we've gotten some emails, saying that, the market, that was wrong and this and that. And what you have to understand is that when you're running on almost perfection with calling these market turns way ahead, where this one was called on August 19th, that there was going to be a top on September 18th, S&P dropped over 200 points. Then in the 23rd newsletter, the bottom was set for October 15th. From there, almost to the day, the S&P ran 240 points to the next turn date, which was December 6th, where it dropped 100 points. And from there, we were supposed to get a rally into year end, which we did get that. And we were supposed to drop into January 15th. We got exactly that. This is the rally on the 15th. But this was supposed to go into the February 6th time frame, where we were supposed to make a top. But things got very, very choppy, and we got capitulation here. Now, Woody didn't realize how important this low was, because when we rallied, we got the turn on the exact date that it was supposed to be on February 6th. But then we got the big day up. So this is where everything changed, and the forecast changed. So basically, it's been spot on all the way from August as far as these exact turns. And this was really the only blip, and it was a break even. And it was because of the capitulation here, where this ended up being a very important low, which it was obviously identified after the move was made, but we didn't get hurt. And that's where, being able to change your mindset on a direction, because this was supposed to make a low on February 23rd. So a lot of very, very good market timers, especially when they've been almost at 100% accuracy with their calls, would have stuck with this as coming down into the 23rd. But Woody changed his view right that day, so nobody got hurt on it. So let's go through the newsletters, and this was February 3rd. It was we were supposed to look for a high into February 6th, a low due near February 23rd. So then on the 6th, this is when we sent out our short alert, where you can take a short position. And then on the 10th was where everything changed. And it was, we were looking for strength into the 6th, where it was going to drop. Everything was fine. There was no notable downside traction. So that was picked up on it. And then in this part, he had said that on a scale from 1 to 10, as far as what size position, he had said he would give it a 0 to 1. So things got confusing on the 10th. We were no longer pounding the table on the 23rd being some type of important low. And he had said the market looks really Greek. And then on the 11th, it was confirmed, where yesterday's strength was not in the ideal playbook, but it's always telling. The 2290, the February 2nd with the 90% bullish reversal was of note, and recent relative strength may identify that as a decent low. So everything changed right away. We didn't hold on to that onto the February 23rd turn date. It changed, and we now Woody identified this as an important low. So now we have some important turn dates that are going to be coming in within the next 6 to 8 weeks. And we're probably going to get very, very volatile moves. And that's what I mean by where the overall call was wrong, but you just changed your mind. And this is after being almost perfect this entire time. So I think it's very, very important for a leader or somebody that you're following as far as for market direction or market timing has that ability and has the knowledge to just say something changed. That's not it, where you don't lose money on your trade and hang on to something that a short position that everybody thought that was going to bottom on February 23rd. No, it was all done right here. So we all want to get into those big trades that I was showing you, where the S&P, is dropping 200 points, rallying 240, dropping 100, rallying 100, and then dropping 120. We all want to be in those, but the thing is this, is that they're not going to come every week, and they may not even come every month. And as a trader, you have to be patient and almost think of it as a game of Texas Hold'em. Don't like to compare cards with the stock market, but if you go and bet a huge amount on every hand in Texas Hold'em, you're going to be out of money before you actually get the good hand. So when there's nothing that is really a high, let's say a high odds, low risk trade, you bet little, or you make smaller trades. And what we've seen really since this was December 23rd, December 22nd, if you bought this gap, this breakout gap up here, that was on December 22nd. On February 12th, you just broke even. Everything else has been a mess. So there's been no real huge trades. This is only a 15-minute chart. But again, you would, if you bought this breakout, you just got even 5 days ago. So you had to go through all of this mess. There was no real high odds, low risk trades that were available. And now things are starting to change back and get back to normal again. So, there's a reason why Woody Dorsey has been predicting these reversals for over 35 years, and it's because he's the best there is. And not every turn is going to be correct, as I showed you in the video tonight. But you're going to have a captain or a leader or somebody showing you that, hey, something changed. Take that away. Don't worry about that date anymore. We'll readjust things once things calm down a little bit. And that's probably going to be one of the most important things that you can have at when you're trying to follow some type of service. So sentiment, well, as I promised you, our sentiment chart, we've had a series of 90s up here, 90, 92, 97% bullish. You have to remember, sentiment has to be interpreted, and nobody does this better than Woody Dorsey. Does not mean you have to short just because we have high bullish readings. It means that maybe you don't want to be chasing right now, and that the odds may not be on your side as far as for a lot more room to the upside. So this is our, the sentiment that we put out today. Now we did have a new report that came out today. I definitely think it's worth reading. We have the $99 special for the first 20 subscribers. We are also giving away that QQQ special report for the first 20 subscribers. If you click on it and everybody is gone, you could always do our 1 week free trial. Just click on the subscribe button, and whatever option you choose to take, do you really want to try to navigate through these markets without seeing what the best market timer in the world is thinking? And Woody Dorsey is considered one of the best market timers in the world. And I really think that if you just look at this track record with his exact turns, and this being the only real blip on his radar going all the way back from September, that's pretty much says it all right there. So with that, hopefully you enjoyed this video, and we will have this going next week as well. Take care.